Okay, so let me quickly do a little bit of live testing. I want to show you some trades I took in the last 2 days. On gold, you can see it's XAUUSD and basically using the Asian Open. So I stayed up to take these trades live. And if you remember, the first step of this strategy is to look for the Asia Open at 8 p.m. New York time. So yeah, last night's one was, that will be 14th July and 8 p.m. So you can see it here. Make sure that your time zone is showing UTC -4. All right. So you can see New York at the bottom right here. You can do that. Even on mobile, you can set it to New York. So mine is always set to New York because of these strategies. But in Nigeria time, it's about 1 a.m. for this strategy. So we go to 8 p.m. So you can see it has pointed it right on this candle here. And I want to put a vertical line. So if you don't have this, this is my favorite here. You can come over to the left. You see this second one with a trend line, the diagonal line. Just click on this side. You see all these tools. So you can put favorites in front of the ones you want to keep using. So I have one for vertical line and I have for horizontal line, all the ones I use on a daily. So I'm using the vertical line here. So I'm going to put one at 8 p.m. Okay. I'm going to put another one at 9 p.m. So I just like to do this immediately before I start trading, and the last one at 12. Okay, so this is 15-minute chart. I'm going to zoom in a bit. What I'm looking for now, which is the second step, is the most recent high and low before 8 p.m. So again, what is the recent high? A candle that has a lower high on the left and a lower high on the right. That is a swing high. Okay, and that high must not be broken before 8 p.m. All right, so I would have taken this one, but let me zoom in a bit. As you can see, this high was actually taken before 8 p.m. was taken on this candle, so this is not valid. So I'll just keep going left and looking up. So this is the next one that I can take, and this one was not violated before 8. So I just basically drag it like that to 9, and then I look for the one on the bottom. So so this one even looks a bit confusing, but when you zoom in, it's pretty much clear. So all these are lower lows to the left. You can see this is lower than this is lower than this is lower than this is lower than this. So I'll just keep going till I get one that has a lower low to the left and right, which is this one. So I drag it to the left. Very simple. At this point in my trading, all these candles are not there. So basically I'm seeing something. I'm seeing something. Can I even do the replay? Let me see if I can do the replay. No, I can't. So I'm using a free version. I can't do the replay. But I'm seeing something like this. That's what I'm seeing at 9 a.m. This white candle opens here. So what's the next step? We're on to step 3 now. Step 1, I've drawn my lines. Step 2, I've identified the high and low before 8 p.m. And step 3 is I'm going to wait until one of those highs is broken. So I keep waiting. On the 15-minute chart now, let's say you are busy or you're even sleeping. Let's assume you are not a deep sleeper. You can actually set your alarm for 15 minutes and just check, okay? Or set an alert on this line. Like now, if I right click at this point, I can do add alert, which is actually what I did. So I can add an alert and move it to that line. I can also do the same thing here, or just come and click this plus, move it to that line, click the plus, and add an alert. So what that does, yeah, I can't do it now. I have so many alerts. So what that does is if price touches this point, you get alerts. Okay. So which is very, very helpful. So once it got to 9 p.m. and I did not see any touch, immediately before 9 p.m., I will revise my high and low. Okay. So I want to look for the lowest low, the recent low before 9, which is this one. I take it to the future. And then The recent high is still this one because it wasn't tagged, you know, before 9. So I drag this as well. Now, I keep going. This candle opens, nothing. And then this second candle opens and shoots up first. Okay, now you're seeing it like this because it has closed, but this wick was the first direction before it came here. So it opened here and went up. So as soon as it tagged here, my alert would have sounded. And then let me just put a mark here because I'm back testing now. So I'll go down to the 1 minute time frame. And what's that time? Go to the 1 minute time frame right here. So this was where I had that tag. So you can see it was a very slight tag. And immediately price shut down. So it's as if price it struggled to touch it and just immediately dropped. Now, once we have this, we are now on the 1 minute chart. What are we looking for? We are looking for a market structure shift. Remember that my diagram? 1, 2, 3, and 4. We want this kind of structure to show. Something like this. All right. We want a higher high, a high, a low, a higher high, and then a low that breaks this one. That's the kind of signature we want to get. And then this will be our market structure shift. Now, once price breaks this low here, we understand that as a change in the market structure. And what we're now looking for is for price to come back into this range here, into this range somewhere here. And so we can take a short and then we can go down. So we're looking for something like that. And then we target 1 to 2. 1 to 2. Very simple idea. Okay, so let's see what happened here. So we had this, we had this high, low, higher high, right? And then this crazy drop. And this drop took out this low. That's the signature we are looking for. So at this point here, this is my market structure shift. So once price broke here with displacement, you can see how violent it was. I'm just looking for a pullback into this range, this third leg here of 4. What is it? 1, 2, 3, 4. This fourth leg here. I'm looking for a pullback into this range so I can take a short. Okay, now I'm going to teach you something new in this particular one because somebody can say, okay, taking a short, once price comes back to this place, I want to enter a short. If you did that in this instance, sometimes it will work out, but you can see that price had already jumped down a lot. It's like it was a bit choppy. So if you did this, where would you put your stop? You would have to put your stop maybe somewhere here, you see, and then target 2. So you would actually require price to come down here, which is still okay because as long as you're still within this range, this is that low before 8, and this is the high before 8, you'll be fine. But you know that we have adjusted the low now because before 9, we adjusted our low. So this was the 9 p.m. That's just a 9 p.m. low. What I mean is the low before 9 p.m. But you can see that we are already very close to that. This thing already brought us very close to the low. So what is the range you're actually looking to target? Are you seeing that now? So this is a little bit of refinement that you would learn over time. So I would not have taken this particular trade because it would have stopped me out. It will not even get to 1-to-1. You understand? It won't get you to 1-to-1. So what I usually do, and this just take this as a normal trading trading idea or principle. When you are trying to take a short inside of a range, just like this one, make sure you're taking it above the 50% mark. So if price came from here down here, you should not, and you're trying to short, and this is the bottom of the range. You see that there isn't much gap there. So make sure you are above the 50% of this total range. Okay, if I draw a rectangle here, Then my rectangle is calibrated. It will actually show you 50%. So this was the short. So you can see this line is at the middle. So you would want to take your trade. You would want to take your trade somewhere around that point, or maybe you could take it from this place. I think that was actually what I did. This was the significant swing low. You want to take your trade around 50%, above 50% or at the 50% mark. So for this reason, I didn't take my trade at this low because this was under 50%. All right. So I actually took my trade. I believe it was here. I took my trade. Okay, just to refine a bit, all right. But this one comes with experience. But if you are taking your trade here, where's 50% mark? You see it. Normally you would have taken it, but just shifted it up to 50%. Okay, so that it would take my so that it fulfills this requirement, and then you put your stop at that place, you would still have gotten 1-to-1 here. You see, you would have gotten 1-to-1 at that point, even at this low. So what would have happened is that you would have taken right. Let me see where we got tagged in. Yes, you would have put a limit order here. It went down, it would have come back, it would have tagged you in here, and then it will go down and hit 1-to-1. Right. At the point it hit 1-to-1, you would have moved your stops to break even. Can you see that? You would have taken a partial 50% off or 40% off, whichever one you want, or 70% off, and then you would have been stopped out right here. You would have been stopped out right on this candle. So this would have been a more like a break-even trade, but not break-even. You would have taken like maybe 50% win on this. Okay. So I actually took this from this place because this is an order block. Again, that is just some more advanced strategy, but I took that as an order block and I was tagged in right here. Okay, my stop was there. And so when I had when I reached 1-to-1, which is the same thing, but when I reached 1-to-1 here, took my profit, 50%, I moved my stops to break even, and then the trade came down, came back as if it was going to target, but you can see it didn't get to 1-to-2. It was 1.4, and then it reversed, and then stopped me at that break even. So this was a win, like 50% win. So let's look at, and if you have questions about it, just ask in the Discord. If you're watching this video, I'll put the link to my Discord on the description so you can check it. So let's go to Sunday. Yeah, I think I took a trade on Sunday. That's Monday morning for us in Nigeria, but this is Sunday New York time because it's Sunday 8 p.m. So Sunday 8 p.m., 15-minute chart. Let's go back to Sunday 8 p.m. Right there. That was Sunday 8 p.m. So immediately I mark 9 and I mark 12. I mark 12. Okay, so once I do that, the next thing I do is recent high before 9. That was very easy. That was this one. Recent low before 9. That was this. Okay. Oh, sorry, before 8 rather. Before 8. So that all these were lower lows. Yeah. So you can see that again, this one did not hit any of the points before 9. So once we got to 9, I would have adjusted this up here because this was now the most recent low before 9. I would have adjusted this one as well, most recent high before 9. Very simple strategy, very mechanical. Okay, so immediately at that 9, can you see that the thing dropped? The price shot and touched that line. Okay, so I'll drop down to 1 minute. I'll come here. Okay. So this was the 9 o'clock mark. So, and this was where price dropped below that nine. So now we're looking for longs, right? Because it has already touched the lower part. We're looking for longs back into this range here. So we're looking for a market structure shift. How does that look? 1, 2, 3, and we're looking for a reversal that sweeps this low like that. That's what we're looking for, so that we can take our entry somewhere in a fair value gap, somewhere here. Take our entry there. I like to put my stops below the recent high and then target 1 to 2. Okay, let's just keep it simple. There are ways you can actually refine and get more, but let's just keep it simple, 1 to 2. So we're looking for that. So we keep going. Let me zoom out here. I think it took some time before I got that. So I had this swing up, swing low, swing high, swing low, swing high, swing low. This one looked like it wanted to, but I want to take that as a market structure shift. And it kept going down like that, kept going down like that, kept going down like that, kept going down like that. I wouldn't take this again as a market structure shift because the price did not sweep. If it swept this and went up, then yes, that would have been a market structure shift. But it did not do that. It actually just came here. So which was more like a double bottom. I'm not looking for a double bottom. I'm looking for a liquidity sweep. Something like that. Okay. So the price kept going up and down until it came here, came here, came here. You see this? Came down and came up. At this point, that was my market structure. This was around 1040. 1040. All right. So as I'm watching the trades, it took a long time. As I was watching the trade, this is my market structure shift here. So let me delete this so we don't get confused. So price came down. I believe you understand. From this high, so from here, swing low, swing high. This low broke this one. Can you see that pattern there? This low broke this one, and then this high broke this one. At the point where this low broke this, I'm looking for this. I'm looking for a break of this, and I'm looking for an energetic move. That was what I was looking for. So once I had that, this energetic move up, what do I call an energetic move? A move that leaves behind a fair value gap. This is what they call a fair value gap, all right? I think I've explained that already in the previous video. If you want a more in-depth strategy explanation, go and watch my previous video. I'll link it in the description as well, where I took over 20-something trades and I was explaining each one when I was back testing the strategy. So this is a fair value gap right here between this high of this candle and this low of this candle. That gap is a fair value gap. So I draw that into the future. Okay, so let's make it yellow. So what would you do? You would put your buy. So you can see now that we have the break of this structure here and we have the fair value gap here. And some of you could have entered on this, some of you could have entered on this, but you can see that I said something in the previous trade that I want to enter on the 50% of this, ideally, of this range. But if I wanted to do that, I would have been waiting for something like the price never got to 50%. Sometimes price is just in a hurry, and it's okay. You can miss the trade. All right, it's not the end of the world. But if you had entered on this particular fair value gap, if I saw something like this, I know that price is very likely to at least come to 50%. Okay, 50%. I'm not expecting price to break this fair value gap, the bottom of the fair value gap, but at least I want to enter under this line. So if I can't get, if I don't assume 50% of this range, at least I want to take it under this this structural point here. So that was where my entry was. And It's a limit order. Once price shot up to this point, like this, once this price shot up here, immediately this thing closes, I put my limit order. I've already marked this fair value gap. Immediately this one, sorry, immediately this um second candle close, I've marked my fair value gap. Immediately this white candle broke this high, I was already waiting for an entry point because my criteria of a market structure shift was fulfilled. So once this candle closed, I knew that, all right, there's a fair value gap and I should be looking to enter very, very soon. So I put my limit order right here at this point, right? Limit order, put my stop below here and look for 1 to 2. Okay. I'm not sure I got 1 to 2 in this case. Yeah. So basically, once we got to 1 to 1, right here, I move my stops to break even and, you know, and I got stopped out somewhere here. Okay. How could I have also played this trade? Again, if you are more aggressive, you can put your stop under the fair value gap and then you target 1 to 2. So there are people that do that, especially if this gap is a lot. If the gap is a lot, but I didn't consider that a lot. All right. You can put your stop under here. You can put it under here. You can put it under the wick. Some people put it under the body. That's up to you, and if you had done that, probably you would have gotten your 1 to 2 here. You see? So over time, you can be flexible and you can see based on how you interpret the chart, okay, how you could trade it. So these were the 2 last trades that I took. But this one was actually a win for me. I got the 1 to 2. I believe I put my stop maybe under the body or under this volume imbalance or so. But the other one was a break-even trade, which was like 50% win anyway. So that's how you could have played this trade. And I'll probably be doing some live. This is like a recap, but I'll be doing some live trades in the Discord. So if you want to join me, and these are bread and butter trades, you can know that it is 70% or 80% sure, guarantee that you're going to make money on a daily basis. And I mean, imagine you're making 2%. You're risking 1% to make 2% every day. You have five days in a week, and let's assume that you actually win 4 trades and you lose 1. Or you win 3 trades and you lose 2. Okay, that means if you win 3 trades, that's 6R, isn't it? That's 6R wins. And if you lose 2, so this is 3 trades, that's 6R. Okay, if you lose 2 trades, that's what? 2R, because each trade is 1% risk, but your wins are 2% risk. So if you do this loss. 6 minus 4, that's 4R win per week. If your risk is 4%, 1%, that means your win is actually 4% per week. 4% per week in a month is what? 16% per month. Can you see that everything I'm doing is to get you guys to the point where you're making over 10% per month on your account? And I told you guys that everybody can do this. If you are just disciplined and consistent and you're patient, okay, over the long time, you will make a lot of money. Remember my analysis in terms of the compounding, okay? My 5-year plan. If you can make 10% every month and you can compound that, you are going to be financially free in 3 to 5 years. All right. So I'll see you on the next one. If you want to learn more about this, join my Discord, where I've started trading this with my guys there, and then we can talk. If you have questions, we'll talk about it and just make sure that everybody's printing money. All right. So see you on the next video. Happy trading and God bless.